Good afternoon, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures here on May 13th. Bring you some commentary here in the energy markets. Let's get started here. Crude prices, after being quite a bit firmer this morning, mainly on the heels of the API data that came out yesterday, have now actually started to pull back and have weakened here. We're currently off about 15 cents. The June contract is trading at about $60.60 a barrel. So really seen some weakness in there here, right down near the lows. Brent is also a touch weaker, trading around 66.77. Those are both for the June contract. Nat gas bucking the trend a little bit. That's up about 3 to 4 cents. RBOB's unchanged, and the heating oil is a touch firmer. That's off about that's up about half a cent. So one of the things here, as I mentioned, we had API data out yesterday. This morning we had the EIA data come out here. Pretty much confirmed what API data told us, and that is this. We saw a draw in crude oil stockpiles. We were down about 2.2 million barrels. We also saw a draw last week, and what's interesting to note, it's like deja vu. Last week we saw a draw in the stockpiles, and initially we were a touch firmer, and then the market sold off. And today, kind of the same scenario so far here today. We were a touch firmer, and we've seen prices pull back. And it's interesting because prior to that, over the last several weeks, we've been seeing builds in stockpiles, and yet when you look at the price action on the chart, crude prices were actually moving up here. So really kind of seeing a little bit of reversal there. But one of the things I think, obviously lending a little support here to the market. Of course, that API data yesterday, and so the market may be anticipating that we might see a little bit larger draw than what was reported in the EIA data. But you look at some of the other positive factors that were kind of starting off this morning here. We saw a weaker dollar. We're seeing imports that were actually down a little bit. Refinery demand has been up a little bit. And I mentioned that in some of the other posts here. When you look at the refinery capacity utilization levels, those have been running year over year a little bit stronger than normal. So we've really seen the demand there. And I think that a lot of that is we've seen pretty strong demand for RBOB. So strong demand for the products at the commercial level here, creating stronger demand here for the oil. Nonetheless here, something that I mentioned in yesterday's eView, which is our bi-monthly newsletter that we put out. I write the column in there in the energy markets. I talked to traders in that issue about the market possibly being a little bit in overbought territory. And I still stand by that here today. And I think that's part of the reason why the market's pulling back. I think the technicals are a little bit overbought up here, and we could see prices pull down a little bit. Now, my opinion here, I think traders could still remain cautiously bullish the market, but I do think that the market is poised for a small pullback. If you'd like to hear a little bit more on that, how you could possibly take advantage of that here, whether you're a bull or bear in the market, give me a call, shoot me an email, we can get into more detail. And options on futures may involve substantial risk and may not be suitable for all investors.